is I can't wait for it, and I'm going to try to describe how I trade now. I do have new indicators that I use that I made. I'm going to try to explain to you how I see the market. And with these indicators, it's probably the closest I've been to really representing visually like what I see or what I need to see or what I want to see. And so when you look at the candles here, I got my little pointer here, so let me grab that. So when you look at these candles, maybe, and you see how they go from red to orange to red, back to orange and back to red, and it's just bloody right here, right? All real hot. Okay, so orange is the first sign of downward motion, right? And so that means you have less volume and the price closed lower than it previously did a cycle back. I'm not going to get into how what my cycle is, but anyways, so X amount of numbers back, bars back. And so it's comparing to a bar back there on what the volume was and whether it's higher than lower than that bar and whether it closed higher or lower than that bar. And so that is to go in with my cycle theory, like timing of the market. It tests the market every cycle. And so by testing each candle to its previous end cycle to see where it was price-wise and whether or not it had more volume or less volume, you can start to paint a picture of what the market is like at this price range compared to what it was a full cycle ago. And so that's important. And so here it's saying that price is less than it was a full cycle ago, right? So we're in a downward swing, so it's a heavy push down. And then you see this red line right here? This red line is the, this is going to be hard. Okay, so this is the sum over the average bar's height or movement range. I guess over the average bar's range that these bars have moved accumulatively, and that's what pushes these lines out. So like, okay, so every time the bar goes up and closes positive, it's whatever it closes above the average of the previous of the average of all these bars is what is added to the price of this line here, and so it pushes it further out. And so collectively, if you have a lot of downward movement, this green line stays up higher, and then as you get to the end of that downward movement, these prices are still lower than the previous ones over here, but you can see that the green line stops moving down, actually starts to flatline, and then starts to go back up. Because this downward movement is starting to catch up, the negative from all this downward movement is starting to add up. And so then that's when it causes the green line to start to move up. Well, actually the green line, the candles push the green line up. So when the candles push up, it pushes this green line up higher. And so basically what it's saying is that it's breaking the threshold of what is owed. So the green line is what's owed to the bull side. The red line is what's owed to the red side. If that makes sense. All right, I'm not going to try to spend too much time on that. And that's probably a harder thing to explain and to comprehend there, but if you think of everything as like ebb and flow, whatever I give to the bull side, I got to give to the bear side, right? If I push down X amount of candles, well, I got to push up X amount of candles, right? Or a better way to look at it is if I push down X amount of price over the average, then that is what I'm owed to the green side, right? And so that's where this threshold, this envelope comes from. All right. And so what you want is price to hit the bottom one, right? And bend it down, theoretically. You want it to crack as well. So it's moved up here and then all of a sudden got pushed back down, right? And so that's good. So if it was still down here at this bottom part down here, it wouldn't have touched this, right? So you want it to get pushed down. And so when it came down and pushed down, it moved far enough down to crack this, this threshold volume right here, or price level. And then it moved up. It showed that it could go above these two moving averages right here, the orange and the blue, with this candle here, and then pushed back down and cracked this one to get the liquidity underneath this candle, right? Because there's a big push here. And then that caused it to close for the first time above these two lines, right? Because it didn't close above these lines over here, but it did right here. It closed above both of them. And that's what caused it to have that buying surge, right? This is what is causing, this is your FOMO basically. These two lines crossing is where the FOMO is. And so boom, it explodes upwards, right? And then it cracks the green threshold line, right? Showing that there is a surge of bullish activity going into this price action right here. And so, like, this is a crypto, and you guys know I don't really trade crypto. It's not my thing. But, you know, with me working regular hours, I don't really get to see the market and trade and get my fix for being in trades and taking trades. So this is like my fix, my cure-all to that, is because crypto is always open, and it seems like it's gonna be a mainstay with all the stuff that's going on in you know, in the government with the crypto. So pengu is Pudgy penguin, and it has a lot of good things going for it, and you can also trade it on Robinhood. So it's open 24/7, and for $100 you can get like 2,700 shares. And so I wanted something I can play with and make trades with using my chart analysis, just so I can get my fix for the day. You know, if I can make, you know, a couple bucks here and there or whatever, that's great, you know, because it's just for me to kind of tighten up on what I see and not get rusty, right? And so when I saw this trade right here, I got in. I even paid, I think, 36.8 for it, and it even pushed down 2 times before it even took off to meet my 36.8 that I paid for it, which is fine because you know, when I saw this move, the way I trade now, it's threshold trading, right? I want to see a deep push down, right? Blood red. Theoretically, like a lot of times you'll see this turn blue to green down here. And so what blue to green means is that blue and green means that the price closed higher than the big cycle back on the same candle, a cycle back. Blue means it had less volume maybe, but the price closed higher, and green means it had more volume and the price closed higher. So when you start to see those sprinkle in, that's when you know it's getting ready to go. But I just used my threshold here to kind of figure out that this thing was going to pop. So once it came down here and cracked, you know, this threshold here, pushed it down to the indecision there, cracked it again, but soaked up and left that wick there, and then closed up. It tried to push down right here and then closed back up above all of those right there. I kind of knew it was going to take off and run. And so then it got up above this area right here, and I decided to just go ahead and get in. And then it finished up its move, retested this low, and then took off and went. And so then you can see, you know, now if you look at the price action, it went to green here, and it's just flip-flopping between blue and green, which means that from here, the price is higher than the end of the cycle back here, X amount of bars back. The price is higher, but the volume isn't as high, which means that it hit absorption right here. And so price is just naturally moving up because the demand is spiking right here and causing it to go up. And the other thing is that whenever you see price action go above these 2 lines right here, that's usually a bullish sentiment, and it's going to hit this top green line, and then it'll come back down to this blue line. If it goes up and it's stuck in between these 2 lines right here, it'll just ping pong like this until it gets and touches one side or the other. And then it might break out above it and, you know, take off and run like it did right here. But now it's just going to bounce and ride this all the way up its own profit run, basically. So this is a lot like my, I guess, volume. What is it? When you average volume and price together, I have a moving average lines for those. It's a lot like that indicator, but just more sophisticated. I think it's less seizure inducing. But look at the price, how it's just basically pocketed right here between those 2 lines. When it drops below it, that's usually like a sign for warning, like it might dump from there. But as long as it doesn't hit this orange one down here, the orange one right there, it's still pretty bullish. And so now you can see, like, it came down and did this little reaccumulation right there, never came down and hit the orange or the red, and then it took off and got bullish again, right? And so now this right here, these little lines that come off right here, the green ones, I have red ones too, don't know if they're on here still. They might disappear over time, I don't know. But I get red ones too if it closes red. But that's the highest. That means that this is the highest volume bar compared to the last full cycle. And so this is too. Like this is when this one happened, this was the highest volume bar compared to all the previous bars, X amount of bars back in the cycle. And so then when this one popped right here, that means that this is even more bullish than this one right here. And so when you see multiple of these stacking like this in a row, it's usually a good sign that you're in a pretty bullish trend there, and it's going to come back and manipulate this last one here. And if it doesn't hold here, it's going to come down and manipulate or try to hit this one. And it usually fails to hit this one, and it ends up going back up. But in this case, it held it here, and it just kept going up. And so that's it. I mean, whether it's crypto or if it's stock, it doesn't matter. You can make money. A chart's a chart's a chart. They all read the same way, right? And just so you know, you don't have to have tons of money. Like $100 buys 2,700 shares, and that's how I combat against this being a stupid 3-cent, crypto, right? Because I used to lose money in crypto because I didn't know what I was doing, right? I didn't know how to trade it, and I couldn't look at it right. I couldn't figure it out, and I let my emotions let me force my way in or whatever, and I wouldn't choose the right moment. But now that I've learned how to pick these spots like this when I find the bottom and it's a retest and it's strong, it's really changed how I get in and out of stocks, even my option plays. But so just to kind of give you a recap, I got in at this price here at 36.8, and now throughout my workday, at the end of my workday, it's at 39.165. Let's just say it was at 38.6 here. That's 2 whole cents. So I just gained $53 for 2 cents movement. So I mean, like, you don't have to spend Bitcoin money in order to make money throughout the day. Yeah, $53 is $53, but it's fucking 2 cents. Like, if this thing moves, if it actually really moves, it could move like 5, 6, 7, 10 cents. So you just got to catch it right. But the thing is that if you catch these moves right, I mean, that's $53. I can just go ahead and I can close this out and cap $53 for the day. That adds up over time. Like if I get another 53 tomorrow, that's $100. That's another option. That's another one of these on top of this. So I could buy another 2,700 shares and throw it right on top of this if I wanted to. And then that would be, the next time it would be $100 that it goes up. So, anyways, I can't wait for it. And these are my new indicators that I use. So it's threshold. It's a mix of volume, cycle trading, and threshold trading with some bar analysis there. Like waiting for it to hit bottom, leave a big wick, push away from it, come back and retest that area. It's big. The retest area is the big part about it. Like, I can't stress enough, like, learning that part is the part that you need to understand, because you get scared and you get out, or you let your emotions get the best of you. But anytime you have a push down like this, whoops, did not mean to touch that. Anytime you have a push down like this, it's like a deep red push down like this, and it bounces, it's going to come back and retest it. And so this theoretically was where I thought it was going to take off and go again, but it didn't get down far enough, I guess. So it went up again, and it must have failed right here to go up, and maybe that's why it came back down, did another tour, and it did a bounce, and then it put another retest here to break this, and then came and pushed down and broke it again, but closed above this area, or equal to, and that's what caused it to to get that confidence to take off and launch right there. But the main things I look for is when it hits the bottom red and it then hits the top green, right? In that order. Bottom red, top green. Once it hits that, then I look for a retest to the bottom red there, which we get here. Boom, boom, and then that's your guy right there. And that saves you all this time right here. You don't have to wait for all that. You just bottom red, top green, and then wait for it to retest the red. If it misses it and then it pulls strong and then it pushes back down, it fails, and then it pulls back above it again, that's your cue to get in. So anyways, hope that helps, and happy trading, and I'll see you on the next one. I'm still in TMC. I just got 2 new option calls on that, and it moved up to like $8.18. It came down to like $7.70 today, so it's going to bounce around there or whatever. Still pretty strong in that, but I don't know. The more I play with this crypto thing, if it keeps doing this, then I might just move a lot of my money over and play with this, because I mean, I can pull some change out of this. And so my next thoughts is that if it comes down and cracks this, like gets close to 38.6, I'll probably take my 2 cents and close out, let this come down, and then load back in, and then